Good day, fellow investors. Is Apple still a good fit for your portfolio? To answer that, we need to discuss the risk and reward and what can we expect as a return if we hold Apple now. So Apple did great over the last 5 years, 281% up, but now the P ratio is 34 and the market capitalization is a staggering 3.4 trillion. And perhaps this chart makes it look even better. This is when I bought a little bit, P ratio of 10. Now, of course, I stupidly sold too early, but okay. This is what has happened. And just looked quickly at what others are saying. Some say that this will recover, some say that there is too much competition and risk, overblown AI, so Google, holiday quarter gains, and iPhone, Apple Intelligence. The bulls say it will really kick some ass, and therefore this is the bull thesis. The hold, don't sell is the stock just keeps going up. And if we look at the chart, maybe even here at the beginning of this year it was a sell on rationality, but it is up 17% since. And then one could say that Apple is a sell on AI, Apple Intelligence, overblown expectations, China, stagnation, and of course valuation. Let's look at the financials so that you can see the risk and reward, and then we can focus on what should happen, what has to happen for Apple to justify the current price and the current valuation. If we take a look at revenues, for example, yes, there has been the pandemic boom, but since then, for the last 4 years, and we'll see the earnings at the end of this month, there has been, let's say, stagnation. If I look at net income, 94 billion went to 102 billion. Those are huge numbers, but again, 4 years of stagnation. And Apple is using all the money to lower the shares outstanding. Earnings per share, because of the buybacks, grew faster than net income. But look at this. Weighted average diluted shares outstanding, the decline in 2019 was 7%. Now it is just 3%. So they are spending a lot of money on repurchases, but 5 years ago they spent 70 billion and lowered the number of shares outstanding by 7%. Now they are spending 96 billion, 30 billion more, and they are lowering 30%. This is because the stock is up significantly, and therefore the effect of those buybacks is much lower. Then when it comes to returns, P ratio 34, 3.4 trillion market capitalization, net income 100 billion. So if I want to invest in Apple or I hold Apple, what do I expect there? Do I expect just it to stay there and hold my wealth, preserve my capital? Well, with the P ratio 34, if the P ratio goes down to 20, you are 40% down. That's 2023 levels, so nothing significant has changed since. Further, if, let's say, in 5 years the P ratio normalizes to 20, then to justify and for me to make some money, Apple needs to have net income of 200 billion. That's 2x from this. Given the gross margin, revenues need to go to 800 billion, a 2x in a few years. Can that happen? Anything can happen with Apple, but what is the chances and risk that you are taking for seeing that happen? And the key question is the P ratio going to hold? Because we are now at 34, but those who are a little bit older like me, we have seen P ratios of 10 for Apple, and then it is up. I don't know whether now everyone says this is new, this time is different. Okay, if that fits you, then you know your decision. But we also know that Warren Buffett has sold a little bit more than 50% of his position at lower than current prices. So Warren Buffett is selling. Tomorrow we'll discuss on how much cash to hold and how is Warren Buffett doing it predicting a crash again like he did in 2005. You'll see that tomorrow. But when it comes to Apple, yes, the stock keeps going up on promises, cars, TV, AI, but the truth is it is stagnating. And if we put this into our comparative table to the stocks that we discussed, fertilizers, now those are trading at the average cycle much cheaper than Apple. Yes, Apple can grow 10% per year if the AI works, but if it doesn't, we are still at 2%, and then the valuation will show that. So that is Apple, that is the risk and reward. If I put this into my value investing quadrant, then Apple is extremely risky for a very low reward. Of course, AI promises can grow, that can happen, but that is not value investing. We try to find investments that offer us now, not promises, no green bananas or green apples, even if sometimes those can be good, but that offer a value now, not a promise in the future. From a value investing perspective, like Buffett, it is clear what to do. You can still gamble around, but I think the risk and reward is pretty clear. This is value investing. Thanks for watching. I'll see you in the next video.